Hi guys, welcome to my YouTube channel. My name is Srinivas. In this video, I am going to explain the version 2 of my previous video strategy, which was based on RSI indicator, useful for long-term swing traders as well as the investors in the stock market. If you have not watched my previous video, I strongly suggest to go through the video first before watching this video because you are not going to understand this video unless you watch the previous video. So why version 2, right? So there are many people who don't have time to track your trades, right? Especially the previous version of the strategy, you need to place stop loss orders, you need to place target orders on a daily basis, or even the broker provide GTD orders, that is fine. But some brokers do not provide a GTD orders specifically as well. So it's very difficult to track your trades to enter and exit, correct? Entry is fine. The main problem will come in the exit part, and sometimes there will be gap downs and you may need to exit at below your stop loss price, and sometimes the broker GTD orders may fail in those cases. That is again another problem. So how do you simplify the process? Okay, I have a solution for you. Let's discuss the strategy. Again, the strategy rules are same as the previous version. Nifty 50 stocks, time frame is weekly, RSI indicator, filter the stock that satisfies below 2 condition. Current week candle and previous week candle should be in green color. Current week RSI is greater than 60. And we sort all the filtered stocks in the descending order of the RSI value. Then we start buying the stocks, okay, as explained in the previous video. And the only change in this version is the highlighted one in yellow color, stop loss. There is no stop loss in this strategy. Target, there is no target. Okay. So then how do you exit your stocks after buying? Yes, the exit criteria is based on the holding period. Either you hold for 1 month, 3 months or 6 months. That's it. Let's say you enter a trade today and your exit criteria is based on 90 days. So just after 90 days completion, you are going to exit the stock. That's it. Whether the stock is in minus 50% loss, minus 80% loss, or plus 20, plus 70, plus 200, plus 300%, doesn't matter. You are just going to exit the stock for that trade. Okay? You don't even need to look at the price. You just exit blindly. And also make sure at any point of time, your portfolio contains only max 10 stocks. It can be 5, 4, depending on the market cycles. In a bear market situation, you may have only 2 to 3 stocks in your portfolio. That's fine. You have to keep waiting till you get the signals. And coming to the capital allocation risk, same as the previous strategy. Assume that you have total 10 lakh. In each stock, you are going to invest 10% of the total capital, that is 1 lakh. Okay. Suppose if you want to compound over the multiple years, once you started using this strategy, in the initial year, it is fine that you are going to invest only 1 lakh in each stock, but how do you compound it over the coming years? Don't compound aggressively on every exit and every entry. I suggest you fix some capital for the entire year. Let's say you are starting in 2024 with a 10 lakh, and at the end of the 2024 year, based on this strategy, let's say your final outstanding amount is 13 lakh, assuming 30% return. Now, in 2024 entire year, whichever the stock you are going to invest will be based on 10% of the 13 lakh. That is 1.3 lakh you are going to invest in each stock in the next year. And complete 2025 year. At the end of the 2025 year, in 2026, whatever the outstanding amount you have in 2026 start, 10% of that capital you are going to buy in each stock. Just follow that. So do compounding on a yearly basis. Don't do compounding on monthly or 3-month basis. That will lead to more drawdowns. Okay, that's a suggestion from my side. Let's backtest this strategy again for the same 20 years from 2005 to 2024. So initially I'm going to keep the holding period as only 1 month, that is 4 weeks, or you can say 28 days. Yeah, the result has come. Let's see. Yeah, instead of using some other external tools, etc., I just coded the CAGR here itself. So that will save my time. Also, the cumulative capital keep growing like this from 2005 to 2024. So in this case, where we have only 1 month holding period, we got 12% CAGR over the period of 20 years. This returns is similar to the Nifty index returns. Okay. And the drawdown is approximately, the drawdown is lesser in this case, maybe 15. Oh, sorry, it's more. They're around 30% loss in 2015. Let's see, max losing streak is minus 16, but on a yearly basis, you have some 30% loss here. That's fine. Let's backtest based on 3 months period. So I'm assuming 13 weeks. Okay. So that is 90 days. You can keep as 90 days. Doesn't matter. Let's backtest this. See, the CAGR over the period of 20 years is 21% almost. So that means if you start with 10 lakh in 2005, the current value is about 4.5 crore, right? This is on Nifty 50 only. And if you look at the 2008 year, there's a 12% loss in the whole year, and there is 12% in 2015 year loss, and there is 2011 minus 8%, 2018 again minus 7%. Rest all years gave really good returns, like 20, 50, 80, right? 30, 39, 15, whatever. Okay. And if you ask me, drawdown is a little more compared to the previous version where you have stop loss and target thing. But if you are not able to track the portfolio and you can't place stop loss target orders in the market frequently, then this strategy will definitely suit for you. But you have to be ready with the 30% or more drawdowns. Okay, don't worry about that. If you just stay in the market for long term, definitely you will get a great results over a period of longer term, minimum 10 years. Okay. Let me do this test again for the 6 months. That is, how many days? 180 days, right? So 26 weeks. Here is calculation is based on weeks. So assuming that you are going to have exit criteria as 180 days, that is 6 months. So in this case, how the backtest will show you the result over the period of last 20 years. Again, in the Nifty 50 stocks. See, this has improved result. 24% CAGR almost. That is, the 10 lakh in 2005 has become 7.5 crore in 2024. This is really good. That too, you don't need to spend much time in the market. The only thing you have to spend is every week you have to spend 15 to 30 minutes at the end of the week to identify the stocks based on the strategy I have explained. Okay. Sometimes, if you are already having the portfolio of 10 stocks and there is no stocks to exit in the current week based on the exit criteria, then you don't need to work anything in that week. Just keep quiet, just watch your portfolio. That's it, nothing else. Most of the time you may encounter this situation. Only half of the weeks in your investment period, you may need to spend some 15 to 30 minutes every week. That's it, nothing else. I hope you like it. Again, this is for the people who are investors, not traders. Traders, they don't have any problem. Generally, they keep on watching the markets, keep on placing the orders on everyday basis. They don't have any problem. But for investors, this strategy is very useful. Okay. And again, the drawdown, you have to be ready with more than 30%. But you will get good returns in the longer run of minimum 10 years. Similar to the previous strategy, there are some challenges and assumptions we took into consideration. So just read this, or you watch the previous video, explain the same stuff. This is my personal website, learnwithsd.com. I'm writing some articles based on investing, trading, different strategies, what strategies give losses, what strategies give profits, etc., just to create awareness among many retailers. I hope these videos and my blog related content should reach more retailers as much as possible. That will give me satisfaction. So I can save many people from losing their entire capital with intraday and option strategies. I hope you like this video. Happy investing, and meet me after 10 years if you rigorously follow this strategy for next 10 years. Thank you.